Hey, there we go. We're live. Amazing. That was an incredibly annoying experience trying to get that set up. Wow. But we are here. We're looking good. We're ready to execute. Okay, now I'm just going to give it a second. Hey, what's going on, Vivian, Paul? How we doing, everybody? Yeah, I still needed to get some things set up, but we are here. We are live. Welcome to the new form. Yes, good morning. You guys know the drill. We're still dropping the ones. Yeah, got a few more things need to get set up here, but we've got enough, to go ahead and get things cooking. Alicia, good morning. This is my first time doing this, and for some reason it was saying that my camera was being used by another application. I'm trying to figure out what application, but we're here. We're rocking and rolling. Let me go ahead and get these things set up here, and I'll give people a chance to make their way in. I know that it's a lot, but hopefully we will get, that carryover there. Yes, good morning. Good morning. What's going on? Hope you guys are excited. Throw a 5 in here if you're excited for a pre-market rundown being on YouTube. Now, it's been something that was requested for a long time, so I'm happy to finally make that available, and kind of, again, continue with this massive action plus consistency. Very, very excited. We've got tons of content coming to you for Instagram. We've got, the YouTube that will be where we house ourselves now. And I'll get everything, set up in the future kind of to my liking, but let's see, we'd rather be executing than not executing, trying to make sure that this fancy autofocus camera has got me in focus. Okay, cool. There we go. And let's worry about diving in here. Okay. Okay. Pulling it up. Bam. There we go. We've got our newsletter up. And by the way, I feel like now I can dive into, since it's on here and everything is working and all cool. Oh, you can throw likes. Make sure you guys throw likes on here, right? For anybody who's new and you've made it past the first 2 minutes of awkwardness, this is the pre-market rundown session, formerly hosted on Instagram at Adam Holland Educates, now here on YouTube. I'll probably end up maybe not keeping this one and going with a more formalized one tomorrow. But excited to just get on here and see if this thing works, try it out. This is basically our morning session every single day before the bell, where we go over any and all information necessary, as well as the mindset necessary to keep you consistently profitable across these crazy markets. I'm your host, Adam Holland, stock options expert, as well as expert market strategist. And we're here to put in, the work necessary to get 1% better today. So I'm excited to do just that. And let's start off with our top news here, Fed departure. So central banking is on the radar again as Lael Brainerd leaves the number 2 role at the Federal Reserve to head up to the National Economic Council. In her new position, she'll coordinate with economic policy making across the executive branch amid a battle over the debt ceiling, and could possibly entertain an even bigger role in the near future. While she was passed over once to become Fed chair following the high-stakes interview at the White House, the new move could put her within reach of the top spot or becoming a future Treasury Secretary as she builds rapport within the Biden administration's inner circle. Now, monetary policy going forward, Brainerd was also known as one of the most dovish members of the Federal Open Market Committee, urging a somewhat less aggressive approach in the fight against inflation. She's also advocated for slowing the pace and intensity of rate hikes, providing a counterweight to the spectrum of policy, especially when compared to the FOMC hawks like Minneapolis Fed President Neil Kashkari and Governor Christopher Waller. While President Biden could nominate a new Fed vice chair with a similar stance, it may not be as easy for the appointee to forge policy consensus through persuasion compared to the institutional respect Brainerd received by serving on the Fed's board since 2014. She also chaired 4 out of the 8 subcommittees on the Fed's Board of Governors. So she was a very, very busy woman when it comes to, being involved and ingrained kind of in the fiscal policy of the U.S. Lael has brought formidable talent. This is a quote, and superb results to everything she's done at the Federal Reserve, Chairman Jay Powell said in a statement. That lengthy list includes her thought leadership on monetary policy and economic research, Her stewardship of financial stability in the payment system, strengthening the financial system, both domestically and globally, and helping to manage the immensely operational agency challenges during the pandemic. My colleagues and I will truly miss her. So, going deeper, Brainerd was a big force behind big bank oversight and regulation and has discussed addressing climate change through the Fed's financial stability mission. In terms of the economy, Seeking Alpha Marketplace author From Growth to Value has pointed to Brainerd's view in a recent article about market direction for 2023, referencing her outlook that despite a constrained labor supply, wages do not appear to be driving inflation in a 1970s style wage price spiral. For those of you guys that don't know, the wage price spiral is basically this like catch 22 where you've got the dragon eating its own tail, where you have prices that are going up, and because of that, people who are working request higher wages, and because they request higher wages, the companies then have to raise their prices, right, on the goods and services that they provide. Then if those companies raise their prices, other ones do, and that makes the cost of living higher for employees, and it's just a spiral that feeds itself, right? That happened in the 1970s and led to rampant, uncontrollable inflation that took Paul Volcker. He had to take drastic measures in order to get that inflation under control. Basically, Lyle Brainerd is saying that we don't have that type of wage price spiral going on right now, so we don't need to take that drastic of measures when it comes to managing inflation. Don't know if I agree with that. I don't know if we need to go all the way to where Volcker went. Is that restrictive? But, I do know that we need to be hawkish when it comes to inflation, because I don't know about you guys, but I'm over it, right? Having to deal with higher prices. And again, it's something that I just compensate by making sure my money's working for me in markets. But also, it's just one of those things where it's like you don't want to see people struggling. I don't like the increase in crime. I don't like the increase, in hate crime. All that stuff comes along with worse economic tensions, right? And people don't recognize that it literally leads to loss of life, because there are people who don't have any other options or don't see as having any other options, and they, just turn to horrible things. So, yeah, I'd rather stick with the higher interest rates for now. Let's see here. All right, Brainerd will also not be the only one reshaping Biden's U.S. economic policy, with longtime confidant Jared Bernstein appointed to head the Council of Economic Advisors. So, in terms of economy news here, and I just want to check. Okay, cool. Check back in. Yes, awesome. Good morning, everybody. Just checking back in. I don't know exactly too how this stream works, but hopefully everything is going well. We're chilling, checking back in. It looks like we're still good. I don't know if you guys pop into it live and then you see it from where it's at, or if you watch it from the beginning. I have no idea. But yeah, anyways, we'll keep it pushing. It looks like everything's going well for now. Good trial run here. I'm excited. All right, so in terms of news regarding the economy, bumpy disinflation, a mixed inflation report resulted in a mixed day for market indices. Following the release of the latest consumer price index report, the Dow and S&P 500 finished the choppy session on Tuesday marginally in the red, while the Nasdaq posted a modest advance. It comes as investors debate the direction of the Fed after the upcoming meeting in March, and the probability of changes to U.S. monetary policy. On display is a headline CPI figure that inched down to 6.4% year over year in January, marking the seventh straight month of easing inflation, or as Powell likes to call it, is his new buzzword, disinflation. Though the cooling is moderating, with CPI rising 0.5% month over month, compared with a previous 0.1% increase in December. Now, in terms of outlook filing takeaways, it's 13F season, where hedge funds with at least $100 million in assets under management reveal their holdings. The flurry of filings gives investors a chance to see what they bought and sold during the quarter, including long positions and call and put options. Those shorts aren't disclosed on the statements. Check out some of the latest headlines to see where smart money is putting their money to work. So it looks like Berkshire Hathaway adds to Apple stake, Pears U.S. Bank Corp, BNY Mellon stakes, Druckenmiller's Duquesne adds NVIDIA, AMD, exits Amazon, Microsoft, and Michael Burry bought Alibaba, SkyWest, and MGM in Q4 before he tweeted sell in Q1. So, just giving context to some of the moves being made out here. Again, that does not mean that is what you need to be doing right now. You have to understand that somebody with the size bag that Warren Buffett has is making different moves than somebody with the size bag of literally every other American, right? So we don't say, oh, Warren Buffett is doing this, it's time for me to do this, because he has a completely different strain, a completely different risk allocation, right? It could be a starter position for him. It could be him, diving all in. We don't know. So just getting little bits of information, like somebody sold this, you don't want to go ahead and sell it just because someone else did. You don't know what their plans are. You don't know where they got in at, and you don't know, kind of everything that's going on behind it. If they were using that as a hedge, right? So you don't want to just make moves solely based off of the moves that other people are making if you don't know the full context. If they went about, okay, cool, awesome. Benjamin said you pick up where you currently are. Cool, cool. I love that. Look, I love that. And it looks like the 4K camera is looking good. Yeah, I'm excited. This is a nice new leg of the journey. And good morning, everybody popping in, right? I'm glad that you saw this. Tomorrow, this is where we'll be at, and we'll be, ready, composed, and diving into markets again. I hope y'all like the setup. I got these gadgets to keep the background interesting. To my girlfriend's chagrin, because she doesn't need me ordering any more gadgets. In terms of stocks here, Reality Bites, Morgan Stanley strategist Mike Wilson, who nailed the 2022 bear market calls, says that stocks are about as disconnected from reality as it's been during this bear market, and that the lows of the market won't come until late spring. But instead of sell it all strategy, Wilson screened for stocks unfairly punished by the market recently. They include Amazon, Southwest, and Schwab. So basically, he's saying something that has kind of been, the picture has been painted over the course of the past few months, where we might get to a point where, we broke the weekly downtrend. Things are bullish at this point since we're over the weekly downtrend. This is the time where you can, ease in, start buying stocks and holding for the long term. But the issue is that there's this like looming cloud that we can get yanked back into a bearish market, right? Considering the fact that we have, car payments at all-time highs, right? With over $1,000 a month on average. We've got credit card debt at all-time highs. We've got household savings at all-time lows. We've got inflation, decreasing, but overall it's still taxing people's pockets and still putting a heavy burden on people's pockets. So you've got this kind of area where also, where the Fed isn't planning as of right now. That could change, but they're not planning on easing monetary policy or injecting money into the economy or decreasing interest rates anytime soon. They're looking to keep interest rates elevated. That kind of sets the stage for there to be some bearish movement back down into the bear's cave. So this is kind of exactly what this same guy is talking about, saying that, hey, listen, this isn't one of those, kind of sell it all strategies, but this is one of those things where, and again, this is somebody who nailed the 2022 bear market calls just like we did, right? Nailing those sell-offs, nailing the calls from all the way back in January, right? Just like we did. He's seeing the same thing, but he's seeing this as a bear market bounce where we get the new lows, right? The real low of lows, kind of in late spring, right? Which isn't too far away, but there's just a lot going on, right? Upcoming in markets. So it's imperative, absolutely imperative, that you are registered for the Market Blueprint Challenge, right? So I'm calling it now. You still find that URL. It's bearblueprint.com. Someone just signed up literally right before we hopped on live here. Like, this is somewhere that you need to be. I don't care if you've learned from me before. I don't care if you haven't learned from me before. I don't care if you're refreshed and you're where you need to be or where you want to be, or if you're not. All levels, you can come and experience what there is to learn there. It's going to be recorded, so you can go back over it until your heart's content and you know it by, know the words by heart. But you got to be in there. February 22nd through 24th is coming up, baby. We're almost here. I'm very, very excited for that. We'll be, running, ripping, diving into the charts, and really learning some great stuff. And we'll also, I know that some people use some different platforms, so I want to kind of show you some tools that I have for different platforms, maybe mix in some trading view, and just really make sure that we're continuing to push, continuing to add tools to the tool belt. So that we're like Batman out there in these markets, right? We're prepared for anything, because luck is when preparation meets opportunity. So you prepare. When the opportunity comes, boom, you're ready. In terms of today's markets, mostly red across the board. This is not surprising given where we closed yesterday, right? We closed beneath the daily downtrend as this part of the bull flag continues to form out. Yesterday, we had the chance to test breakout. We did not close over, so no breakout happened, right? It's a daily downtrend, so you need to close over by end of day to break out. We did not get that, and there was tons of volatility, right? SPY running down, then up, then down again, and then back up. But still not finishing high enough into a point where it could be considered bullish coming into today. So we'll see how that happens. Right now, buyers gathering strength. This looks like a pattern of accumulation where we are accumulating shares over the course of this chop, over the course of this selling. Buyers building strength, and eventually that downtrend will be broken. But for now, it's still intact. So it makes sense that we were opening lower here this morning. In terms of today's economic calendar, we got retail sales at 8:30 a.m. Business inventories. I haven't looked to see, if we are still in the same spot as where we were. It looks like the S&P was down 0.3% when this newsletter came out around an hour ago. Unfortunately, with this beautiful stream that we have going, my laptop did not want to handle both Thinkorswim being up and this stream going. That's actually what caused me issues the first time around. So had to close down Thinkorswim. But yeah, we're opening bearish for sure this morning, unless that data has changed something. And then we're going to finish up here with our rapid fire bullet point rundown. So FTC Commissioner Christine Wilson plans to resign due to Lena Khan. Solid travel demand leads to TripAdvisor earnings topper. So TripAdvisor, ticker TRIP, with a nice surprise to the upside on earnings. Boeing, ticker BA, and Airbus received record order from Air India. What's going on? CSX derailment following Norfolk Southern, or follows Norfolk Southern. Momentum for Tesla despite price flip-flopping and union push. Let's see here. Tesla also, another headline, will make 7,500 chargers in the U.S. available to all. Ford halts F-150 production, electric F-150 production due to battery issue. And then Coca-Cola, ticker KO, talks up coffee and alcohol potential on earnings call. So, Coca-Cola looking to branch into different things. I know everybody wants to be involved in cannabis drinks and alcoholic drinks and, coffee. Pretty much they want to be involved in the drug business, right? We know that caffeine is a drug. We know that, alcohol, again, is a type of substance that can be addictive. So Coca-Cola is like, listen, we already got sugar locked down, right? That's an addictive substance. Let's go ahead and get alcohol in there and get coffee in there too, and just milk you guys dry for all you're worth. Let's see here. Plunge protection team, Turkey to support stocks amid market tremor. So it looks like Turkish markets are skittish right now, and they're going to have some government intervention to support their market. And then FanDuel parent Flutter weighs U.S. listing after record Super Bowl. That is something that, is important to keep an eye on here, as we do have DraftKings reporting tomorrow. I'm not sure if it is tomorrow before or after market open, but that is something to check out. I'm not going to lie. I might go ahead and take the plunge there. It seems like this, could kind of be a layup here. But of course, there are no layups when it comes to earnings reports, right? But this might be as easy as it gets, considering the fact that millions of people, began gambling, and obviously there's going to be a huge influx of business for these platforms. So, MGM and things like that, as you kind of lead up to earnings, I think that they'll, have solid earnings. And I'll check out some of those kind of casino sports betting related stocks here. Because again, for FanDuel and MGM, they're different. They both are involved. It's in sports betting, but MGM has a lot of brick and mortar locations. DraftKings is, literally just the DraftKings sports book. So this is definitely more immediate correlation toward DraftKings and FanDuel. FanDuel is not publicly traded yet, but their parent Flutter might end up, listing here after they've had a record Super Bowl. But in terms of our news, notes, and mindset to keep us here, in a great spot during this day, that wraps us up for the first pre-market rundown on YouTube. I'm super, super excited. You guys don't know how pumped I am. Again, massive action followed up by consistency. I'm not just saying that. I want you guys to see it as well. And this is the mantra that we're on all year long. So I'm not sure if I'll keep this one up, or if I'll make tomorrow our official. This one was kind of rushed and all that. But I'm super excited to be making this change. I'm super excited to have you guys along with me. As always, right, if you enjoyed this, just show love to the account. comment, have people subscribe, share it with them, and make sure you show love over on Instagram. I appreciate the love that I've already been shown, right? You guys commenting on the new content, commenting on the videos. It doesn't have to be anything crazy, right? Throw some hearts, throw some fire emojis, throw some money bags. But all that helps me, just like I'm here each and every morning for free, trying to help you guys, right? I used to just tell people, hey, read the newsletter, make sure you know what's happening, and then meet me in the group, and we're going off, right? We're going off. But now I'm like, all right, let's show up so we can all talk this out, right? Make sure we're on the same page. We're processing things in the same way. So all I ask is that if you have the chance to tap your thumb a few times, it drastically helps me, and I'm very, very appreciative. So thank you for all the love I've been getting. In the comments, I see you guys' comments. I appreciate them. And I thank you for the love to come as we continue to maintain our financial vitality together, right? I'm glad this went off relatively well, and I'll see you guys back here tomorrow morning, right, for our next pre-market rundown session. Have a good one.